Thank you to the witnesses, and thank you, Ms. Savage. I'm going to direct my questions towards you. We've watched the federal government through policies like the 2030 Emissions Reduction Plan effectively target Canada's oil and gas sector. But now the tone seems to be shifting. The government is talking about becoming an energy superpower, building at lightning speed, and driving new investment. Yet we still see the emissions cap. With your extensive and diverse experience in law, government, and the private sector, I'd really like your insight on this. Can we be an energy superpower with the emissions cap? And if not, can you expand on why?
Well, sure. I think we have the ability to be both a clean energy superpower and a conventional energy superpower. We have the ability to be a clean energy superpower, attract investments into new things like hydrogen and clean fuels, critical minerals, new tech. And that's important, but it's also important if we want to be a conventional and energy superpower. That means oil and gas. And I don't believe the emissions cap and the clean electricities regulations are consistent with that at all. If the cap leads to a production cut, which industry says it will, then how can we expand to new and growing markets? We'll continue to be dependent on one market, primarily on one market, the United States. We need to be able to expand our production, to grow markets and develop beyond the United States. The emissions cap is particularly challenging for industry because when they make an investment decision, they have to know, whether it's in clean tech or whether it's where they have their production, they have to know that their investment is, that the project they're investing in is going to cover capital costs, it's going to cover the costs of financing, and it's going to cover operational costs. And if the emissions cap make that unaffordable, make other alternatives in other jurisdictions more investable, we'll lose production and we won't be able to be an energy superpower. Likewise with the clean electricity regulations, as many of you probably heard already, Alberta's electricity grid we're completely off coal, but we're 75% dependent on natural gas regulation. Our gas generators have said they cannot comply with the clean electricity regs as drafted. If we want to be a superpower in both clean energy and conventional energy, we need to support natural gas power generation. That'll support the development of data centers and AI, and both of those regulations are not consistent. On top of that, they're layered onto industrial carbon pricing, which in my view has worked well. Industrial carbon pricing has worked well for both the province and Canada since 2007 in Alberta. Those two regulations layer on top of it. It layers an added layer of complexity. And if we can strengthen and keep the industrial carbon price strong, we do not need the emissions cap or the clean electricities regs. We can do all we need to do to be a clean energy superpower and a conventional energy superpower with working with the provinces and ensuring that we have a robust industrial carbon tax.
Thank you. Thank you so much. Just going back to the targets, Canada is currently projected to achieve only 30 to 35% emissions reduction by 2030, falling short of its 40 to 50% target. At the 48th Canada-United States Law Institute annual conference, you stated it's irresponsible to legislate something that you can't meet, noting that such policies merely export labor and emissions to countries with weaker regulations, effectively transferring economic power and global security abroad. Can you just elaborate quickly on that point? I think it's important.
Well, sure. When you pick a random target for emissions target that you have no ability to meet, that you can't meet, industry will you'll see carbon leakage. Industry will invest somewhere else. We'll see production transfer to other jurisdictions. If we leave a barrel of oil in the ground here in Canada, in Alberta, it'll come out of the ground somewhere else in the world. In countries that have less stable democracies, countries that have lower emissions reduction targets, and it'll be a transfer of not only production, but of wealth and emissions. And that can tend to cause geopolitical instability.
Ms. Savage, again, thank you for being here. Alberta's been a leader in energy of all types and a leader in economic growth. The province has recognized the need to reduce emissions while still growing the economy. And I feel it's important to note here that there are no prosperous, high-cost energy jurisdictions in the world, so the price of energy to the consumer is important. But much of Alberta's emissions are industrial and for far more than other provinces. What opportunities does that create for Alberta?
The emissions profile from Alberta is different than most of the other provinces. If you look at the emissions profile, about over 2/3 of the emissions in Alberta, it's about a little over 250 megatons. Most of our emissions, 2/3, come from the industrial sector. It's the flip side in a lot of other provinces that only 1/3 come from the industrial sector. The rest come from consumer uses and individual uses. That creates both some challenges and some opportunities for Alberta. And I've heard it in the committee quite regularly that Alberta's a laggard. Well, we're not. It's a very different emission profile with the industrial emissions. It can be challenging to reduce those emissions because a number of these industrial sectors are in hard to abate industries, whether it's oil and gas, heavy industry, petrochemical production. Those are trade-exposed industries that if you challenge them and you make them uneconomic, the investment and the projects and the wealth will just shift to other jurisdictions. But it also creates opportunities. I'm always trying to be positive, but I believe it also creates opportunities. And that's because to reduce the emissions in these types of industries can attract investment. It can attract investment in things like CCUS, hydrogen, in clean fuels, sustainable aviation fuel. So attracting that investment creates jobs. So that's why I've said and always look at climate policy, if it's done right, if it balances the economy and emissions reduction, if it's done at a pace and scale that technology and capital investment and regulatory process and supply chains can support the emissions reduction, it becomes good industrial policy, attracting jobs and investment, improving the economy. And that's why I say our emissions profile in Alberta is both an opportunity and a challenge. And Alberta's doing a very good job, and they have for a very long time, of reducing emissions. It was the very first jurisdiction in North America to put a price on carbon. That was in 2007. It was also the very first jurisdiction in North America to bring in methane emission reductions. We got completely off of coal-fired electricity generation in 2024, and all of those policies were facilitated through provincial action, not through federal action, and through working collaboratively with the federal government. So Alberta's doing its part. Our emissions profile are highly in the industrial space, so I just wanted to point that it's a challenge and an opportunity.
Thank you. Thank you very much for that. Have we got another witness back yet?
Not yet, sir. No.
Okay. Further, there's been a lot of discussion by some of the witnesses and over the course of meetings about investing in projects and investing in the investment has to come from somewhere. And it's great to talk about this stuff when it's other people's money. But primary industries are the only real way to generate new capital and new wealth. And the recent layoffs of major companies in Alberta, ConocoPhillips, Enbridge, Imperial, this is a trend that is disturbing and could undermine, economic success in the near future. What measures do you believe are necessary to restore investor confidence?
Well, I think we need to need to be competitive in both our fiscal measures as well as environment measures. If we're bringing in, and to speak back to the emissions reduction plan and addressing climate change, which the committee is studying, we have to bring in policies that reduce emissions in a way that does not frighten away investment. When companies are choosing to invest, whether it's to grow their production, whether it's to build a clean energy plant, a hydrogen plant, where they choose to make their investments, their boards of directors are generally asking three questions. Is this project, is this this activity, is it going to produce enough revenue to cover the cost of capital? Is it going to cover the cost of financing and operating costs?
Thank you, Mr. Chair. Ms. Savage, just briefly, you mentioned some of the massive amounts of investment that have fled this country and under the fact that projects simply cannot get built in this country. Is the development of the Major Projects Office not just an admonishment of the system that consecutive Liberal governments have set up in this country in which projects simply cannot get built and it's easier to put your money in a different country?
Well, I think Bill 5, the Building Canada Act, gives like a workaround, like a complete workaround some of the laws that have inhibited investment, potential workaround the tanker ban, the emissions cap, all of the things that industry is saying holds back investment. So I think that's an acknowledgement that we have a problem in Canada and we can't build things.
Do you think the workaround will work? Or would it be better to repeal all of those Trudeau, Guilbeault, Liberal era piece of legislation?
Ultimately, a lot of that needs to be repealed. That's going to take some time. It's repealing legislation does take some time, especially if you have to consult with Indigenous groups on some of it. But it's the workaround is an acknowledgement that that legislation doesn't work. Bill C-69 in particular needs some significant rewrites, and it's an acknowledgement it needs to be done over time, and we're not going to attract the investment long term if we keep those laws in place.
Particularly Bill C-69, given the constitutionality question of that. Could you expand a little bit on the challenge that poses from an investment perspective?
Well, I mean, Bill C-69, it's been declared unconstitutional. There's been a rewrite. Most lawyers think it's still going to be found unconstitutional. It's being challenged again. Some of the tests that are in Bill C-69, I think they're in Section 22, have climate tests, sustainability tests, tests that cost a lot of money and a lot of uncertainty for companies to try to invest when you don't know what the outcome is. There's political decisions throughout the legislation which create uncertainty. Project proponents want to know that you're not going to have political interference midstream in a project approval, or worse yet, at the very end after you get through an approval. So there's significant changes that have to happen in Bill C-69 in the long run.
Thank you.